Hello everyone, my name's Chris, or Beat the Markets on eToro. In this video, I wanted to have a look at Thor's earnings report. So they just recently released their Q3, so I have a few things that I found quite interesting, so I want to share those in this video. So first of all, probably the most prominent part of the earnings release was that Thor had a beat on their earnings per share. They also raised their guidance slightly. Earnings per share came in at $2.24, and the market was expecting $1.13. Revenue matched at $2.9 billion. Now, I think the market was anticipating another miss on earnings, so there was a lot of upside potential on this beat, which was evidenced in the day. Thor was up 17.67%, so it was a good day for Thor. Obviously, another factor in this was that the company raised the lower end of their guidance. The high end stayed at $6.50, but the low end rose from $5.50 to $5.80. A small increase, but a show of confidence. Management are very confident in the way they've positioned Thor in the midterm. There were some significant declines in North American towables and motorized sales. Towables fell 57.4%, motorized fell 24.4%. At the same time, the company believed that inventory levels for the North American market are slightly higher than they desired. In Europe, it's kind of the opposite. They have below optimal levels, and that's mainly due to supply constraints. They are focusing on the European market. They have a new facility in Poland starting operations. And one of the reasons for this is Europe is showing a reasonable amount of demand from the consumer. European sales increased by 19.7% in the quarter. So the plan basically for Thor at the moment is to lower inventories in the North American market and try to increase that supply into the European market. The company had strong cash generation, which they used to buy back shares as well as pay down some debts. Again, showing confidence as well as strengthening their financial position. Despite these positives, there are still challenges in the near term in regard to affordability. Obviously, interest rates are still high, and Thor sell high ticket price products. So as long as the Fed funds rate, for example, as well as other central bank rates in Europe remain high, that is a near-term problem. So when asked what actions the company were taking to combat the affordability problem, the company said that it's working with dealers to create propositions that resonate with customers. Basically, they're looking to incentivize potential customers through deals or other incentives. And they're also attempting to reduce the cost with suppliers as well, so that they can potentially increase their margins or pass on these savings to the customer. Management did mention that they are seeing an easing in inflation, and we've seen this in a lot of the economic data that's been coming out as well. So in the near term, we still have some challenges. In the midterm, though, I think Thor's positioned itself quite well. Looking out to 2024, by then, in North America, the Fed is probably going to be lowering its rates. We're looking at probably a pause soon. And I wouldn't be surprised if old inventory is cleared out and new models are on the market. Their focus on Europe should also pay off. So for this company, 2024 and beyond is what we're really interested in. I don't think it's wise to focus on this year. It's a difficult environment with high interest rates. Obviously, that doesn't mean that this isn't a good company. And when those interest rates start to decline, that's when we'll start to see Thor shine, I believe. So this is a long-term hold in the portfolio. We're just starting to see the light at the end of the tunnel now. That's all I have for this video. And we'll see what Thor does today as well. After such a big move up, I won't be surprised if it potentially drops a little as we get some profit takers from short-term trades. So I hope you have a good day, and I will see you in the next update.